Hi everyone, welcome to another video by Optionables. My name is Saket, and in this video, as usual, we are going to discuss what happened to the markets on Friday, what we can expect from the markets for the upcoming week, and what happened to our trade. So we'll quickly start off by looking at what happened to the markets. So on Friday, we saw a gap up of close to 150 points. So markets opened with a gap up and it slightly traded below 16,000. So it was consolidating around 15,900 and slowly we started to see some good buying. So from 15,900 market started to move towards 16,000 and it took some resistance and immediately market actually broke 16,000 also. So market broke 16,000 and started to move towards 16,100. So everything was looking very positive and I particularly believed that markets can actually end above 16,000. But it was not long before I was proved wrong. So around 2 o'clock we started to see some huge selling happen in the market. And it is obvious who would have sold so many shares, and that is the FIIs, because they have ended up selling close to 3,700 crores on Friday. So around 2 o'clock the selling started and slowly market came towards 16,000. So here I expected, okay, the markets might end up taking some support, but markets broke 16,000, came towards 15,900. So after it came towards 15,900, I thought, okay, maybe it can try to take some support at 15,900, but no, market broke 15,900 and went towards 15,800. So 15,800 was a very strong support for Nifty, because not just on Thursday but multiple occasions in the past also market has actually taken support at 15,800. So I thought, okay, markets now might end up taking support at 15,800, because on Thursday also market, even though it went below 15,800, end of the day it closed above 15,800. But yesterday was something different. Even though there was so much positivity in the morning, there was some huge sell-off by the afternoon and the market closed below 15,800, somewhere around 15,780. Clearly, the trend is extremely negative. So there is no second doubt about it, because whenever there is some buying which is happening, immediately there is huge amount of shares being sold by FIIs and market is almost closing at the day's low. Never once in the past maybe 1.5-2 weeks we have seen the market close at the highest point of the day. It's always well below the high or maybe at the low point of the day, and that's the reason the trend right now is clearly bearish. If we look at the banking sector, so we don't even have to talk much about it, because it was relatively showing a lot of strength before the RBI rate hike. But once RBI came out with the rate hike, so ever since then Bank Nifty is underperforming Nifty by a huge margin. Even yesterday if you look at it, so Bank Nifty was almost around 34,000 but it closed around 33,100, almost around 900 points from the high. At a point Bank Nifty was almost up by 2%, but while closing it closed around 1.4% or 1.3% lower. Clearly there the sentiment is much worse than Nifty. So in Nifty, what exactly happened is that there were certain sectors like automobile and FMCG. So both of them ended up gaining around 2% each. The entire sector was up by 2% each, and apart from that Reliance was also up by 1.5%. So since these sectors as well as Reliance contribute to some weightage, so they relatively help Nifty to stay where it is. So if not for Reliance, maybe even Nifty would be lower by 100 points. Because there was Reliance, it helped Nifty to stay around 15,800 itself. Unlike Bank Nifty, which ended up falling around 1.3%, Nifty just fell around 0.17%. So now FII selling doesn't seem to stop, and in 2022 alone, we are hardly 5 months into the year, so around 120 to 130 days, and FIIs have sold close to 2 lakh crore. So this is the highest selling that we have ever seen by FII during any point in the year. So the thing is, 2 lakh crore is quite a huge amount. FIIs hold somewhere around 42 lakh crore worth of equity shares in India. And this year alone, they have sold 2 lakh worth of shares, 2 lakh crore worth of shares, which is close to 5%. Last year, they had sold close to 1 lakh crore worth of shares. So together put in, they have sold around 3 lakh crore worth of shares, or 7% of their holdings. So when is this selling going to end? We don't know. So now the sentiment clearly looks bearish. But one thing what we personally believe is market should bottom out somewhere around 15,000 or 15,500 even if the market starts falling. So all of you know that we are short on Nifty futures somewhere around 1000 quantity, and we will start covering our shorts once Nifty either touches 15,500 or 16,000. If we see a decisive close above 16,000, we'll start cutting down our shorts, or if market starts moving towards 15,000 or 15,500, again there we'll slowly start cutting our shorts. Once Nifty, or if Nifty comes towards 15,000, we will actually start going long on Nifty futures. So there are specific reasons why we believe at 15,000 or 14,800 market is at a very fair valuation. That is because by the time Nifty comes to 15,000, the P ratio would have returned to the historical average. Right now it's around 19.8. While it falls around 6 to 7% from here, it will come back towards 18, which is the historical average. Not just this, at this point the risk to reward is in favor of long side, because from 15,000 there are higher chances, or there is a higher probability that the market will head towards 18,000 rather than fall towards 12,000. Because if you take the point of 15,000, there is a very high probability that the market will end up moving 3,000 points higher first before falling 3,000 points. So that means we are from 15,000 we are expecting a move towards 18,000 rather than 12,000, and the risk to reward what market offers at 15,000 is very high on the long side. So coming to the markets and the market expectation, if you actually look at the US markets, so they were beaten down quite badly in the previous week, but last week they fairly did well. If you look at the monthly candle of either S&P, Nasdaq or Dow Jones, what you really find is it has created a huge wick at the bottom. So the markets opened and there was a huge selling, and immediately last 2 days itself we have seen Nasdaq rally close to around 7%. So that is a very good recovery from the bottom, but we don't know whether we are still out of this selling zone or not. But one thing what I can certainly say is even Dow Jones, S&P and Nasdaq are coming towards the fairly valued zone, because historical average of S&P has been somewhere around 16 or 17, and right now it is again trading at 19. So any further downside will put S&P under a fairly valued zone. Not just this, even Nasdaq and Dow Jones will enter fairly valued zone if we see any correction from here, and that's the reason we don't know where the selling is going to end. We don't know if Nifty is going to come towards 14,000 or 13,000. It can definitely happen if the sentiments are really negative, if there is continuous outflow of bad news. So there is a chance, but what we still believe is, even though if there is a chance, the risk to reward what market offers from that point is way higher on the upside. And now coming to the shorter term view, so what we are expecting here, market either going towards 18,000 or 12,000, can be over the course of next 6 months or 8 months. But when we talk about the shorter term view for next week, 16,000 is going to act as a very crucial resistance for the market, because yesterday also in price action we saw that market tried to cross 16,000, immediately it was beaten down, and this level is very crucial for the market on the weekly basis. And when you actually look at the downside, 15,600. So when the market recently ended up crashing during the Russia-Ukraine war, market made a low at 15,600 and immediately it bounced back up. So this swing low is going to act as a very crucial support. Apart from that, even if you look at 15,500 on a weekly time frame, you see a lot of resistance faced by Nifty, and hence this entire level of 15,500 to 600 is going to be a very important support zone for Nifty. And I personally believe that if it comes towards here, it is a good point to cover our shorts, and maybe if the market falls further from there, we can also start going long. So coming to what trades we exactly hold. Right now, when you actually look at the open interest, so we are bearish on the market and we are holding a lot of short positions. Not just short in Nifty futures, 1000 quantity, but apart from that, we also have a deep ITM option buy in Nifty. So 17,500 put option is something which we have purchased, deep ITM option. Apart from that, we have a 33,000 short straddle in Bank Nifty and a 34,000 naked call short in Bank Nifty. So clearly we are on the bearish side of the market itself, and tomorrow SGX Nifty is indicating a gap up of around 120 points. So if something happens what SGX Nifty is suggesting, a gap up of around 150 points or 120 points, easily we will be losing somewhere around 4 to 5 lakh. But we won't be cutting our positions right away until market closes above 16,000. So if the market closes above 16,000, then we'll start cutting our positions. Until then, we will remain short on the market, because clearly there is no positive news which is flowing in, and whenever the market is rising, immediately we are seeing a sell-off. So now the thing is, we'll come to the last part, and that is what happened to our trade. So on Friday, as I told, when Nifty actually ended up crossing around 16,000, so I thought markets might close above 16,000, and I started to cut my positions. Because we were having short positions and the market went up, we ended up losing around 4 lakh. And I closed all my position and I had booked a 4 lakh loss. But immediately we started to see a huge sell-off in the market, and as the market started to come down, we started adding further short positions. So we had closed everything at a point in time, and when the market started to come down, we started adding further short positions. And from negative 4 lakh loss, as the market started to fall, we came towards 1 lakh loss. So we recovered close to 3 lakh just because the market fell from 16,000 to 15,780. The thing is, if we had just left our position as it is without touching it, so yesterday we could have ended with a 4 lakh profit. Instead of that, we just ended with a 1 lakh loss. So good thing is, at a point we had booked 4 lakh loss, and we were able to recover from 4 lakh loss towards 1 lakh loss. We further started to add the short positions as the market started to fall. So we are still holding the short positions, and as I told you, till the market crosses 16,000, we won't be squaring off. So I have shared both the short-term outlook and long-term outlook. Short-term outlook, we are expecting the market to consolidate between 15,500 to 16,000 in the shorter term, and longer run, we are bullish on the market at the current valuations. So with this, we also come to the end of today's video. I hope that you found this video insightful, and also do let us know in the comment section about what you think of the market, whether you're bullish on the market, bearish on the market, or what is your market view. And meanwhile, if you have liked this video, also do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining, guys.